Have you been wondering if now is the right time to buy? If you should keep waiting? Will prices drop? That question has been asked every single decade since homeownership began. Today, I want to do a little dive back into history and also share some of my personal story with you. And hopefully, this will help you on your homeownership journey. Let's dive into it. So, while we don't have a crystal ball to predict the future, we can look back at historical data to just try to help get a sense of what is that next best step. One of the pieces of information that we have for this is the Case-Shiller Home Price Index. The Case-Shiller Home Price Index is one of the most trusted measures of home value trends in the United States. It tracks repeat sale data on the same properties over time. So this means that it measures real appreciation and not just median prices. And this is widely used by economists, lenders, and policymakers to understand how home prices truly move. Here's the information provided by Case-Shiller showing home price appreciation since they started tracking it in 1941. From 1943 to 1947, home prices compounded by 118%. World War II had just ended, millions of service members returned home, and they started families and needed housing fast. Now, at the same time, interest rates were historically low. Government-backed loans like the GI Bill made buying accessible, and construction materials were limited. That surge of demand and limited supply caused those home values to soar, and they continued to rise for more than 40 years after. We then saw another stretch of rapid appreciation from 1974 to 1979, and this is where prices compounded by 93%. It was a time of high inflation and economic volatility. Mortgage rates were climbing, but so were wages and the cost of nearly everything else. Then the fact that the baby boom generation reached home buying age during this time and the demand for housing pushed values even higher for this next decade. After years of growth, and the early 1990s brought us a pause. We had a mild recession, the savings and loan crisis tightened credit, and in certain regions, especially in California and in the Northeast, there were experiences of job losses and even oversupply. The home price appreciation had flattened and even dipped slightly during this time, but it was definitely short-lived, as you can see. By the mid-1990s, the market gained strength and entered another long stretch of growth yet again. Now, everyone of home buying age today remembers the crash of 2007 to 2011, and this is the biggest correction in modern history. But what's often overlooked is what happened afterward. By 2019, most markets had fully recovered, and by today, home values in many areas are roughly double what the buyers had paid back in this peak of 2006 before the crash. This is a powerful reminder that even through major downturns, long-term homeownership has historically come out ahead. Now, I want to share a little bit about my personal experience and my homeownership journey. And even though I have over 20 years of experience in the industry, it's still almost impossible to time the market. We bought our first home in the middle of 2013. And as we can see from the chart, that was well after the markets had started to recover from the crash and had already experienced double-digit appreciation. So as home prices were going up, that is when we entered the market. We bought our second home near the middle of 2021, where the market had already been experiencing double-digit appreciation. And again, home prices were continuing to rise. In both of those times, and nearly a decade apart of each other, we focused on not the big number of what is it going to cost or even where are interest rates. We focused on that monthly number. What can we afford? And how much space do we need? And with that monthly payment that we are going to pay for the amount of space that we need, where can we make that happen for what our family's needs are? And our family's needs are changing. And we look at our life now in seasons. What season of life are we in now? And are we going to see ourselves in about the next 5 years? And is the space that we're currently living in serving us its best in that season? And as the seasons changed and we could see that we needed to make a shift, that's when we did that. In 2015, we refinanced and did a debt consolidation. We had some credit cards that had gotten a little bit out of control, and we had some equity in the home that we were able to tap into to make that happen. But we didn't make that decision lightly. We looked at the pros and cons. We looked at, does it make sense for us to do the debt consolidation refinance and to restructure that lower interest rate that we were at from when we bought the home? Or were we going to be able to still meet our financial goals by leaving that mortgage payment alone and paying that debt off separately? Every household has a different financial situation, so it's best to weigh the pros and cons of the options available and find what's going to be the best fit for you. When we experienced a significant decrease in income in 2023, we found ourselves in a position of needing to request a loan modification. And for us, it was just further proof that even though homeownership is not always easy, it definitely gives you more options than what we would have had if we would have been renting during that time. The truth is, very few people buy at the bottom or sell at the top. And that's okay, because owning real estate isn't about perfect timing. It's about long-term stability, equity, and having a home that fits your season of life. Most homeowners move or refinance every 7 to 10 years. So just focus on buying a home that meets your needs now and then reassess them as they change in the future. Whether it's your first home or your next, history shows us that homeownership definitely pays off. My name is Amber Jones. I'm a certified mortgage advisor, and I'm here to help inform you, empower you, and help you solve that financial obstacle that you're currently facing wherever you're at on your homeownership journey. I would love to have a 15-minute phone call with you to help answer all your questions, address your concerns, and help you plan those next steps. All of my contact information is below, where you can book that call and we can get started. I hope you found this information helpful today. And if you did, I would love it if you liked the video, subscribed, and then shared it with a friend. I hope you have an amazing rest of your day. I'll see you again next time. Bye-bye.